You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, your host. Well, we got a return visit from our good friend Paul Oster, and we're going to be talking about new scams. Everything old is eventually new again, as well as we're going to be getting some insight into the new rule that the current admin has implemented that will effectively penalize creditworthy home buyers and reward deadbeats. Just what you don't want to be doing. Paul, great to have you back. Hey, just tell us again your website before we get started.
Sure. Great to be back. It's betterqualified.com.
Betterqualified.com, and there's a link to that in the show notes. By the way, if you got a question for Paul or myself, I know this is a very popular topic, what we discuss. Shoot me an email, kl@kerrylutz.com. So, Paul, it's great to have you back and connect with you. You know, you're one of my oldest running guests. We've been doing this almost since the beginning when I started the podcast 11 years ago, and amazing how things have changed. But some things don't change. So these skimmer things are back again. I mean, they used to nail me on them at the gas stations in Miami.
You know, yeah, I mean, it was worldwide, and it was so easy because all they had to do was get the data off of that magnetic strip, and it had everything, and it was unencrypted, stagnant data. So once you swiped the skimmer, you know, the identity thieves had everything that they needed. Moving forward, they went to the chip card, which made it much, much more difficult. But like everything else, the identity thieves and the bad actors have now upgraded their technologies. So they're back. And they're back both as skimming, which is where they'll take a device and actually, you know, it's an overlay that they put on top of an ATM machine, any point of sale device. Gas stations are notoriously bad for this. But the latest technology is what's called a shimmer. And this is where they actually take a very small circuit board and insert it inside of the machine. Much harder to detect it, you know, with just physically looking at a device, because most of the times they pop the thing open, pop it in, and close it back up, and nobody's the wiser until they realize that a lot of their customers' data has been stolen. So they're now able to decrypt and get most of the data off of even the chip cards. A lot of times they do it in conjunction with a camera that's installed. They want to see you put in the 3-digit CVV code. They want to see you put in any other data that they can grab, and they do that via very, very small cameras. So between those things, believe it or not, coming out of the pandemic, this type of credit card fraud and identity theft is exploding and on the rise, unfortunately.
Really? That's a real shock there that it came back again. I can't believe that. And
yep.
There was a time when I was getting a new credit card from American Express once a month. It was unbelievable.
Yeah. So this, you know, this goes back to, you know, one of the ways that you can limit your exposure and your risk. And look, if they get in, if you use a debit card in this situation, they could literally drain your account. If you use a credit card, which obviously we don't try and promote because people get themselves in trouble by using the credit card, but at least the credit card, you know, you're not responsible for any fraudulent charges. And in the case of using a debit card, you're going to get your money back, but typically they will freeze your account during the investigation, which becomes a huge inconvenience, you know, at that point in time. So we're up against, you know, these bad actors. And Kerry, one of the things I didn't really grasped was when you look at Silicon Valley and you look at the tens of thousands of very, very smart, technologically advanced workers that have been laid off, unfortunately, when they fall on hard times, they're the ones that are being recruited to perpetrate these crimes and to advance their technologies on their side. So we're in for some rough waters when it comes to identity theft and cybersecurity.
It's kind of like that movie Fun with Dick and Jane, where they both get laid off from their jobs. I think it was like George Segal and Jane Fonda, and then they become bank robbers. They're not really good at it, but then they keep improving and getting better and better at it, right?
Absolutely.
Oh, man. Will it ever cease? But the good news is I got a Tesla, so I never even use a credit card to fill my car up anymore. So at least that exposure has been limited in my case.
Yeah, well, I don't know about that. the smarter the cars, the smarter, those are now open, portals. It's like, believe it or not, they were hacking into refrigerators and anything that's connected to the internet. They can reverse engineer it and somehow gain access to your data.
Yeah, I was always worried that my refrigerator would turn state's evidence against me.
Yep.
What a world. What a world. Hey, on to other things. So you heard about this proposal that's being implemented today, I believe, that will penalize creditworthy borrowers who are seeking I guess, FHA or federally backed mortgage and reward the deadbeats.
Yeah, this is, I am not a fan of this at all. If they wanted to put forward a program that helped people that had some credit issues, look, the pandemic was very unfriendly to everybody. But the reality is to do it this way, and they've tried to spin it 1,000 different ways. The bottom line here is on an average, let's say $300,000 mortgage, somebody with less than stellar credit. Let's say you're at a 620, right? And then you take somebody who is above a 680 or a 700. The person with the lower credit is going to save close to $4,000. The person with the higher credit is going to wind up paying about $400 more. So it really is going to sting people. This is only for government-backed loans, like your Federal Housing Authority, your FHA loans. So if you get a conventional loan, then you're okay. The problem with this also is that the Fed, the government, the administration assumed that people who have higher credit scores have a higher net worth value. And that's certainly not the case. Income has nothing to do with your FICO score. And they know that on both sides of the coin here. So to penalize somebody, let's say a person is making minimum wage. They've been exhausting their resources. They have 2 jobs just to pay their bills on time. And they go to get a first-time home buyer mortgage, and they're going to get penalized because they've actually done what they were supposed to do. This is completely bananas to me. It's counterintuitive, and it's probably one of the biggest socialized piece of legislation that's ever been passed. And there wasn't a lot of fanfare around it. A lot of people are going to find out when they actually apply for a mortgage.
Yeah, and it should go on the closing statement on the HUD-1 as a deadbeat tax.
100%. 100%. Again, you want to put programs to help foster first-time home buyers, to help the underbanked, all these different communities. That's great. Put those programs in place, give them incentives, help them out for sure. Down payment assistance programs, grants, all of that is awesome. But how did we get to a point where, again, this is not taxing the rich to pay the poor. This is taxing, let's call it a tax. This is penalizing someone who has a good credit score to help somebody who doesn't have a good credit score. And again, you could have people that are not wealthy. They're the same socioeconomic status as the person who's getting rewarded. Again, this just does not make sense to me. I hope they actually repeal it and get rid of it.
Yeah, well, Congress is threatening to override it, and it seems like both parties are in an uproar over this, which is unusual.
Yeah. Just
another example of government overreach. Do you think they'll revoke it or repeal it, override it?
I do. The banking industry as a whole is very, very powerful. They're the ones that are screaming and hollering because, again, this just does not make sense. So I think it goes back on the table. And again, massage it, tweak it. If you want to help the people that had fallen on hard times and their credit has suffered because of it, that's a good idea, right? Again, I would just do it during the pandemic. If you suffered some financial hardships, you missed some bills, listen, if you miss one payment, a 30-day late payment comes onto your credit report, it could easily cost you 50 points. Those 50 points could wind up costing you hundreds, if not thousands of dollars, especially when you're talking about a mortgage. So if you want to help those people, great, but you certainly can't do it by penalizing the people, again, who have exhausted themselves to pay their bills on time.
Yeah, it certainly is an outrage by any calculation, and it's not a political thing at all. This is reward people who have managed to get through the pandemic and keep their credit high, maybe give them a bonus too, because presumably if these people can get through a pandemic without defaulting on various obligations, they're going to be a more creditworthy risk.
100%. They're the ones that will ultimately drive the economy moving forward anyway. So this is just such a negative impact on the people who, again, were doing everything that they possibly could to maintain a good credit score, and to penalize them for those efforts it just doesn't make any sense.
Yeah, it's just a slap in the face. It really is. It's not a lot of money or $100, but hey, you can maybe take the family on a vacation for that, or a weekend.
Yeah,
weekend.
Well, listen, even if it was only $50 a month, right? So $50 a month, $600 a year, on a 30-year mortgage, we're talking a lot of money. Now, the average person doesn't hold the mortgage for 30 years. I get that. But some people do. And so we're smart enough to figure out a different path and a different way to help the people. I don't want to say that they deserve it, but we can certainly help the people that need it the most. And that's certainly people that have suffered, a negative impact to their credit scores. Your credit score is going to cost or save you money every single month, whether it's financing, whether it's insurance, security deposits, for cell phones and having utilities turned on. It's going to cost or save you money every single month, relatively speaking. So the people that, are below a 740, actually, it's all tiered-based pricing. So the minute you drop below a 740, you're going to pay a little bit more. If you're a 720 to a 740, you're going to pay a little bit more than someone who's a 740 and above. If you're below a 720, if you're between a 700 and a 720, you're going to pay that much more. And it goes right down 680, 660, 640, and to a point, typically if you're below a 580, you're not even going to get approved for the mortgage. And if you do, people are screaming about the interest rates that they see on the TV. Well, those rates are for people with a 740 or above. If you're a 600 and the bank has some program that can get you approved, you're probably paying close to 9%.
Mm-hmm. Yep. Hey, give us one tip, one hack that can help you raise your credit score without doing a heck of a lot.
Yeah, I mean, the easiest way possible, I'll give you two. You have to build new accounts, open positive accounts. There's all sorts of credit builder companies out there. One is called Self. Excellent company. The results are great. It won't cost you a lot of money to do it. And then the other thing is to pay down that credit card debt, because that's, the second biggest score factor that impacts your scores. So figure out a way to get out of credit card debt. We say it all the time, but add new positive accounts to your credit report. And you can do that even if you have lower scores. Credit builder accounts, you can get approved even if you have a lower credit score. Secured credit cards, you can get approved even if you have a lower credit score. So it's just a numbers game. You have to skew it in the other direction. You have to have more open positive accounts than you do negative accounts.
All right. Well, we appreciate you coming on, Paul. As always, find Paul's site. Check him out on betterqualified.com. And you can find a link to it in the show notes of this interview on financialsurvivalnetwork.com. Just click it and you'll go there. And while you're there, sign up for a free newsletter. And if you got any questions, comments, whatever for Paul, myself, shoot me an email, kl@kerrylutz.com. Paul, great catching up with you. We'll talk to you again real soon.
Thanks so much, Kerry. Bye now.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.